Good evening, everybody, and welcome to another edition of Live Market Analysis. It is a pleasure to be joining you as we pick up the pieces of the recent market volatility, try and make head and tails of it all, and hopefully come out with some really good trading setups by the end of it, as I like to do at the start of these presentations, centre myself. Let us do the disclaimer before we get too far down the track, and that says that the content of these presentations, it's just information. You know, it's what we call general advice. That means it has not taken into account your personal financial circumstances, objectives, or particular needs. So before acting upon any of that general advice, you should consider it carefully or seek the help of a financial professional to determine its appropriateness to you. Always remember, of course, that trading, investing is risky. There's just as much chance that you're going to lose money as you are to make it. We've seen that in the last couple of weeks where markets go down. They don't just go up. Always remember that it's you and not I is responsible for everything that you choose to do. With that in mind, my job tonight is to do the analysis for you to some extent, but also hopefully to teach you how to do it yourself. That's the most important thing. And you can put in any chart of any security. It could be a crypto, it could be a stock, it could be a bond, it could be a commodity, whatever you want analysed. I'll do that for you based upon my technical analysis model, or it could be anything about trading. On that note, the anything about trading bit of it, let me go back to the den here, the trading den. Let me realise also that it's not daytime, it's nighttime, so let's change that. We've obviously got the market appropriate signage today, which says hang in there, everybody. We will get through this and there'll be a trend on the other side of it. Now, that's the original, yes. So we've got a couple of books. This is Carl's book club. Hopefully you listened to the YouTube watch list that I sent you with those 8 fantastic readings of Market Wizards. And this is the physical book. It's worth getting. So I know we've done a naughty thing. We've listened to them for free on YouTube. But get on your favourite bookstore there, or go into your favourite bookstore. The author is Jack D. Schwager, and that's the original. Now, Jack, obviously the first one was so successful and changed so many traders' lives, as it did mine, that he went on to write probably 4 or 5 more. They never reached the heady heights of wisdom that the first one did. So certainly that is the one you must read, and that's the one you've been listening to, and that's what it looks like there, and that's probably, that is, I think, the original edition. I've had that for probably over 20 years. And then the second one is also very good. That's the New Market Wizards. And that one is definitely worth getting as well. So definitely those two, and then don't worry about the rest of them. I did read them, and they are not worth it. I think the first 4 chapters of this book are some of the best writing on trading and the way you need to think as a trader that I've read. So that one's definitely worth getting, and it's by Curtis Faith. And there is definitely a link between Curtis Faith and the first Market Wizards, because in this Market Wizards book, of course, is interviewed Richard Dennis, who is the father of the Turtles, and he and Bill Eckhart, his partner at the time, had a bet that trading could be taught. Richard Dennis believed it could be, that if you gave somebody the right model and the right parameters to apply that model, which is exactly what I'm doing, people could learn to be good traders. And Bill said, no, good traders are born. They're just inherent that way. I can tell you that's not the case, because I wasn't born with the right traits for trading. I had to learn them. So that's a very good first 4 chapters. The rest of it's not very good, but it's worth it for the first 4. Curtis Faith, The Way of the Turtle. This is, I forgot about Weinstein. Weinstein would be the 6th one, but you already know about Weinstein. The reason why I thought of it is obviously Weinstein's Secrets of Profiting in Bull and Bear Markets. That is the best book on technical analysis that was ever written, until I write mine eventually. Corny titles, Trade Your Way to Financial Freedom. It is a terrible title, and normally I would avoid books with that title. But it was quite revolutionary when it was released. And Van Tharp, who was actually also, I think, interviewed somewhere in one of those Market Wizards books as well, but not as a trader, more as the systems developer, perhaps. I can't remember exactly why he was in one of them, but he was in one of them. And this is less about trading systems and more about money management. So that's why you would want to read that one. Position sizing algorithms and things like that, which I would love to do with you some stage in the not too distant future, I hope. But this is just us chatting on Monday nights. It is not a subscription-based course or anything like that. I don't do those for a very good reason. I couldn't be bothered. I've done them before in a past life, and I don't intend to do them probably for a very long time. But this is the other book here, which is by Mark Douglas, Trading in the Zone, and this one is about the mindset. So you probably, one of the things I hope that has stuck with you, the things that I keep telling you, is that the future is unknown. We don't know what the next print is. And this is something that, this is a book that left that mark on me. So that's the thing I got out of this. I had the pleasure of meeting Mark in Hawaii, of all places. He and I were presenting at both, co-presenting, so not together, but separately. So I'm quite proud to say I was held in that regard at one stage in my career in terms of my trading expertise. And I met him there, and he's a very, very good person as well. So those are the 5 books I just ran off before this session and got from my bookshelf, which I think you're definitely worth reading. And of course, the Weinstein book on top of that. And I've got dozens of others. Maybe we'll do them another time. But we are not doing what we should be doing, which is looking at charts. So let's head over to the AUDJPY broker screen, and we'll get to the offline requests first. Hopefully that was worth your while. If you like that sort of stuff, give me a thumbs up. If you don't like that sort of stuff, give me a thumbs down. I won't do it again. Getting some thumbs up, good. That wasn't a waste of time. We'll go to Peter. Actually, we'll do the whip around the grounds first, and we'll kick off with the Nasdaq, the portfolio management system, which I think was touched upon in one of those market wizards where they talk, I can't remember who it was, but they talk about sort of setting your risk based upon what the index is doing. I wouldn't say I got it from there. I'd like to think that's something I developed on my own accord. But this idea that you have individual trades, and we obviously manage those, but the number of individual trades and the risk that they represent are then, over on top of that, is overlaid this portfolio management system. And if it was only to do with the Nasdaq, which it was at one stage, we would have been all in cash for that tumble. Alas, it wasn't to be, because I very cleverly switched it to the Russell 2000, which we'll look at in a second. But the Nasdaq has had a pretty good rally from the dark green zone, which is exactly where we would expect that dynamic demand to kick in. I must admit, this candle really threw me. I thought that was, if you see that candle after a sharp drop, and confirmed also, let's zoom in a little bit, by this candle here, that reaching, sort of trying to get back up into supply zones, because we know that trough there will be supply. We've got a lower shadow here, lower shadow here, lower shadow here. We've got black candles. That is a wall of supply as far as I can see. And then we've also got the dynamic supply from the short-term trend ribbon coming in. So when I sort of see that, a really dead cat sort of bounce, and then that, I get really concerned. I got really concerned. I sent you a message on Twitter saying everybody probably want to be heading towards zero risk. And then such is the case. It's just the number of times I've jumped at shadows of the Nasdaq and then have not been rewarded the next day because it just pops up like crazy is this day here, where you can see the close, and then you can see we kind of open up 500-600 points just on the open. We shadow it, and then we go up to the top, and then we've got to follow through here. I don't think we're out of the woods, despite the fact that we have had 2 decent candles. As I said, this is the big test now. I mean, I think this is almost a moot point here. We knew we'd get a bounce from here anyway, didn't we? This was annoying. And then here and here, okay, we're coming up into this zone. And what we need to see here is the candles. I probably won't be broadcasting when that occurs. We'll know by next Monday what that zone brings us. But if we do see the black candles there, the black bodies, and the shadows pointing up, okay, they are the lines that stick out of the box parts of the candles. The only way you can get those lines pointing up, we don't have a lot of examples on screen, but basically you're pushing up in the middle of a trading session or during a trading session, and then by the end of that session you're getting pushed back down. The supply is coming in and pushing the price down to give that upward pointing shadow. And if we were to see those shadows into that zone, that would tell us we are not getting through that zone. If, on the other hand, and again, I can't predict the future, I think there will be a great deal of supply there, but I won't know until I get there, and then we see how the supply, or if the supply manifests itself. If the supply manifests itself, that will be black bodies and upper shadows. If the demand side instead of that says, no, we're actually not worried about this, or that supply isn't there, you're going to see the white candles or the downward pointing shadows. And if that's the case, then we're probably fine here on the Nasdaq. I shouldn't say probably. I know I hedge my bet sometimes. I think we are fine. If we see the white candles in there, we probably will go, I said probably again, go up and make some higher troughs and do some good stuff. 17792. The top of this candle is everything, obviously, after this level there, 17015. It's 17792. And I think the Nasdaq is back to an index of significant importance to us because it's such a risk-on gauge, which is why I always use it as my benchmark, because it's such a risk-on gauge. But we did switch to the Russell because it represented the broad market. The Nasdaq was doing some very Nasdaq sort of things with the mega caps. This hasn't bounced, in fact. It's kind of gone back to the old crappy Russell. Look at the size of that black candle, and again, as good as that one is, we're still hovering within the range of that, the black candle from the 7th of the 8th. And if I go back to this one, we can see we've actually pushed through the top here on the Nasdaq, and that's the difference between the two. So once again, I don't know, it's mega cap, it's big cap, it's liquidity, and the breadth of the Russell is taking a bit of a back seat. I'm concerned about the Russell. I'm still concerned about the Nasdaq, but the Nasdaq is looking better. Let us now look for if there is anything to contradict in any of these other global markets, this idea of where should we be. I think what we're seeing there is 1/3 at most is probably the sort of risk we should have in the market, and that means 2/3 in cash. It's not 1/3 longs and another third of shorts. It's just 1/3 in total. And the reason for that is that this is not a great time to be a trend trader when indexes and prices and stocks are doing this. We say in choppy markets, well, in fact, Ed Sakota said this. He's one of those 8 chapters. In choppy markets, trend traders get chopped up, and that's not what we want to do. So in my experience, the best thing to do is to resist temptation and just keep your powder dry as best you can. It does still mean you can have a third in the market, so we are still going to be, if you don't have that third, in looking for some setups, but within that third, probably a fairly even balance between longs and shorts. And as we start to move through, for example, that 17015, you can then start to, you're not going to go from a third to 2/3 straight away, but you can start to maybe add a little with a goal of getting there eventually. And if you're above 17792, then you're probably 2/3, and then we're probably an FRP when we're travelling towards 18761. And I hope what I just said to you makes a lot of sense, because if you think about the uncertainty we have, if this was a stock chart, we'd be minus 3/3 all out. Okay, so. And we would be saying, you'd see me drawing things like this. I'd be saying, well, what do we need to see happen, everybody? Where I just go through the motions like it's a stock you've asked me about. I know it's a stock that I would never buy, but I'm being very polite and I'm talking about it like I'd never buy it. But hey, these are the things it would need to do for me to think it was interesting. So in code, when I'm saying that sort of stuff, I think your stock's rubbish, but I'm being nice by saying these are the things that it needs to do. All right. These are the things it would need to do to start to look good. This is the situation we're in. So it's going to take a Herculean effort, I believe, to get this Nasdaq through here, and then higher peaks and higher troughs, and then through here. That's the sort of proof I think we want as trend followers before we start to significantly reinvest risk into this market scenario. Okay, I think we've covered that, and we will just very quickly see if there's anything that's going to swing it either way in these other indices. And I don't think there is anything in that one to say we should be more than, say, a third risk at the most. Certainly not there. When we see these sort of tectonic shifts, these vertical shifts, so you remember year 12 geography, you did a bit of plate tectonics, and you get the fold. Is it the fold? Not the fold mountains, the block mountains. where the plates shift like this. That's what I want you to see when you see these vertical moves and then a bit of flat. We've had a tectonic shift in the underlying demand-supply environment. Similar there. Nothing is telling me that we need to have more risk at this stage. Okay, nothing's really telling me we need to have less risk either than the little bit that we would have in. Obviously, Asia, nothing good there until we get to here where it's horrific. That is about as bad a chart as you can get. I mean, this is how bear markets are created, from corrections like this. India's fine for now, and then we get to China, which was rubbish anyway. So there's nothing new in China, that was already rubbish. and not really giving us a great indication, to be honest, of anything. And there's your tectonic shift on the Aussie market. Okay, that is things have changed. So let us not be flippant about that. Where do we need to get above? I think 78.61 with a nice big white candle close would be very encouraging. We're still yet to see a higher peak, higher trough. That would also be very important for me. But again, if something big has happened, we need something equal and opposite of insignificance to make me feel comfortable again. Within sectors, if you're looking for shorts, I still think energy is where you're probably going to be looking, and resources as well is probably where you're going to be looking. If you're looking to add risk, then discretionary still looks okay. There's still got your shift in the end there. Financials, I'm not so sure about that at the moment. I think that's had too big a shift. Technology probably put into that camp as well, although there's a couple of decent candles at the end. Property, neither here nor there. Healthcare, I'm curious now. Actually, still fine. Healthcare looks okay to me. Staples has had a pretty decent shift, but holding that long-term trend ribbon. Look at that on the knocker there. Pure coincidence, because it's all a bunch of different stocks. Utilities, not so bad. Telecommunications, all over the place. Let us very quickly then have a look at some of these other charts here. So this is the tectonic shift in the Australian dollar versus the Japanese yen. You say, what is the significance of that car? We don't normally look at it. Well, we don't normally check the health of the carry trade. I've written a couple of articles on Market Index, which you should check out, and Livewire about what the carry trade is and what its importance is to markets, particularly our own. And we want to see a recovery here. We want to see a healing of this carry trade. I probably want to see this get above 100, 101. To say that episode is behind us, and if we get there and we get a Fed rate cut, but not too many rate cuts, then I think we're in a really good place. But that is yet to be seen. Having a quick look at the base metals here. This is from the London Metals Exchange, and I'm going to change that to a line chart and just zoom that out a little bit to give it some perspective. We actually have had a little bit of a bounce there in aluminium. That's encouraging, but still awful. The copper bounce is insignificant. You can't even see it, and that is all the copper rally of 2024 evaporated. Iron ore doesn't appear until I do something like this and take off the percentage sign, which Amy Broker doesn't like. There we go, and that looks bloody awful, of course. That's the technical term for iron ore. Nickel looks bloody awful. And then the other ones are varying degrees of awful. Tin trying to bounce is probably the best of those ones. If you follow me on Twitter, you know that I have been charting the lithium minerals prices for a couple of years now as a hobby, nothing else. It's I don't take pleasure in the complete dissolving of this whole concept, but it is a study for me in trend following. So the trend is your friend, and it is certainly your friend if you're not long that one or you're short. Let's have a quick look at that silver. I think that story is over for the time being, and gold is actually still hanging in there. But we will look at some of those things, or as in a different light when we get to the Amy Broker screen. Bitcoin, no comment. It's neither here nor there. I don't think we need to worry too much about that. We talked about silver. I think that story is over. A bit like copper. That one is still bubbling along. Less of a speculative bubble, I think, in gold, and obviously more of a hedge against some of the bad things that might happen in the world. But that looks half decent, let's say. That's high-grade copper. Actually, a little bit of a decent candle developing. That last candle is live, so we should discount it because everything else looks terrible. But that's not too bad. And then we got the iron ore candle today. Wasn't great. The uranium, hopefully you can see the little dots here. I'm sure you've got your own chart on TradingView where you actually look at the same thing. But that has changed trend. We are now in a long-term downtrend, and my view hasn't changed on that. The charts of crude oil are neither here nor there, ultimately within a range between 70.67 and 84.83, but heading back towards or through the middle of that range. And Newcastle coal is actually an interesting chart for me because we are seeing it for the first time since, going back here, first time since this day here, which is the 10th of January 2023, so in about 18 months, the first time it is trading above the long-term trend ribbon. Okay, wouldn't exactly say it's a screaming buy or anything like that, but it is no longer a downtrend. It is certainly a neutral trend. It is basing out. It's one of those classic base patterns. So if we were to see it push up a little bit pull back and hold that long-term trend ribbon as dynamic demand, that would make things very interesting there for the thermal coal price. The coking coal price has just literally dropped off a cliff, and that is because, you should know why that is, because of the iron ore price, okay, because it's a key ingredient like iron ore in the steelmaking process, and between that and the iron ore chart and the copper chart, you would assume that the global economic backdrop is quite concerning, or in contraction from some of those charts, which is a little bit disturbing. And then when you kind of look at the bond market, you kind of think, well, actually, that's the most logical explanation, is that the global economy is about to be in the toilet, or at least the US economy, based upon this government 2-year government bond. Obviously, when it was coming down for a while, it was okay because we wanted lower rates, and then I did tell you in advance this idea of this inflection point that would come. I didn't say when it would come. I said I don't know when it would come. You'll see it in prices. You'll see this go. And, at the moment we're seeing this go down and stocks go up, and that was the status quo. All of a sudden you'll see this go down and stocks crash, and that's what happens because we go from lower rates are good because we're not going to get higher rates, to lower rates are bad because the economy is going to be in the toilet. They're the 2s, they're the 5s, they're the 10s, and you can keep going. We're down to 3 8s, 3 9s. And the official rate obviously at 5.25. So there's a disconnect there. And when you get those big disconnects, they're often precursors of a recession in the US. Unfortunately, they've been a very accurate predictor. What I'm showing you here is something I haven't shown you for a while. Definitely, if you've been watching me long enough, we used to check this quite regularly. Back when we were in the inflationary pulse, inflation was printing 6, 7, 8%, depending on where you were. I haven't looked at it for a while because inflation's obviously been coming down. We've been in a disinflationary environment, but we're looking at 5-year inflation-protected bonds, the TIPS, Treasury inflation-protected securities, and the nominal yields. And when you take one from the other, you get the real yield, which is your inflation compensation, which is a bit of macro mumbo jumbo for over the next 5 years. Inflation is expected to average under 2% now, and that's the key here. And last week we didn't see this; it didn't happen. It only just happened towards the end of last week. And 2%, of course, is the Federal Reserve's target. So the market is now saying inflation's not a problem anymore. So we should probably listen to the market and also work along these lines. That really inflation is not the story anymore. Fighting inflation is not the story. It might start to shift towards saving or promoting growth, and that's an interesting little flip in the markets. If you haven't been in markets very long, you're about to learn something new. Let us go to another key macro indicator, of course, which is the Japanese 2-year here, which is the key short-term benchmark yield in Japan. And we saw it creep up in anticipation of the Bank of Japan meeting, where they did increase rates. And then we've seen it suddenly come down. That's because we've got significant repatriation of funds. We've got a switch out of the Nikkei. So this is the Nikkei drop here, where Japanese pension funds are selling their equities, their Japanese equities, to buy bonds. There's an inverse relationship between bond prices and bond yields. So obviously, as you're buying more bonds, you're pushing up the price, which pushes down the yields very suddenly from those highs, because you had an event, you had a liquidity event, and that what we don't want to see here is this one ebb and flow down, because that would indicate that the carry trade isn't healing, and we're in a bit of trouble. And everything I've said to you is very complicated, but don't worry, I'll keep an eye on it for you, so you don't have to worry too much about it. If something interesting happens, I'll definitely let you know. That is the whip around the grounds, ladies and gentlemen. Let us get back to your... You okay? My 12-year-old son he rides shotgun on these. He's been doing it for a couple of months, and he's reading reminiscences of a stock operator at the moment, aren't you? And he's enjoying that. So we've got, maybe in the not too distant future, when I'm not able to do these, we've got somebody to take them over. Let us go to my normal Zoom here, and we will. Could you imagine if you were getting taught this stuff at 12 years old? How valuable that would have been. I wasn't. We're going to go to Peter, who's got SPR, which is a great looking chart here. It's as far as I know, it's a gold stock. Correct me if I'm wrong. Obviously, gold price is going up. Last time we looked at it was here. We said FRP I don't think there's been anything so sinister to push us out of a trade. If you really were, no, I don't think this is a downtrend, is it? That's an inside bar. I reckon that's an inside bar. That is an inside bar. So this is all one trend, and then we did go up. So we did have a little dink here, didn't we? So if you said, okay, on this candle here, I'm going to do a third, no problems at all. I think that's quite sensible. So minus a third there. Yes. This candle here, a little lower shadow in the zone. Whether you would have done another minus third, look, I don't mind if you did it. Again, I think you had reason to do it. If you didn't do it, you say, oh, look, I'll give it another candle in the zone, a little bit of a lower shadow. I don't mind that either. You certainly wouldn't have done it on this stage. So that's a hold, that's a hold, that's a hold. That's probably almost an add, and certainly I think you've got an add here. I think the bottom line here is where we could be is holding, and I won't write it up there because, well, actually we'll write plus 1/3 because you can do that. But I think what we've got in terms of a total risk position is plus 2/3 on this one. The final third, I think we've got a very logical place beneath here. If we were to see a close beneath there, so we'll go close less than is minus 1/3. If you had a signal before that, you could probably go more than that, and that would be your final third, but we don't know what we don't know. So for you, Peter, full risk position, if you happen to be that way, if you've taken some of those steps, you're holding what you've got, and you could be contemplating adding another third. If you don't have it, I can't see why, based on the last candle, you couldn't add a third at this stage. Let's get to the end of the day and see if we can find better sales. But that is good stuff. We've got two strong trends. Ideally, after we've seen this price action pattern, I do prefer to have the same going back up. So a little dink coming back telling us that we've got a little pullback that's met demand and we're heading back up. But those last three candles are strong enough in their own right, I think, to warrant that plus 1/3. Let's go to PNV, which is Peter's second one. Not as good as that one, clearly. We've got a few maybes here. So get rid of that one because that's me saying if you saw that, well, let me put that back. If you saw that candle, minus 1/3. And to be fair, we kind of saw it. Well, unfortunately, we kind of saw it too late in there, so certainly you would have done that. I reckon on that candle there, you would have done another one, okay? And then I say at most you've got a third here on this one. So I think, and I won't write it up there because we're not adding a third, but I'll write it down here to say this is at most, I think, our portfolio position. It's heading back up, maybe a little bit frustrated you got out towards the bottom. Okay, well, that's life, unfortunately, sometimes. Looks like last time we looked at it was an FRP, wasn't it? Somewhere around there, and certainly warranted on that day. What we couldn't foresee is what happened last week. And what happened last week, unfortunately, ruined a bunch of great setups and probably hastened the demise on some that were starting to turn already. And you know exactly that's what happened. So I think hold your third. I don't think we now need to add another third because of this. The severity of this is far more severe than SPR, and I think these are great case studies to hold against each other. This is a far stronger bounce or holding of the short-term trend ribbon. We've got great candles in there, 3 great candles in there, 2 great candles out of it, and not a lot of fear about what this little MPOS represents here, and that is an MPOS because it's the highest point between medium-term uptrend on the left-hand side and medium-term downtrend on the right-hand side. And then when you look at PNV, just great case study. Look what we did with the short-term uptrend ribbon. We went straight through it. There should have been demand there. There wasn't. We printed this horrible candle to get through there, then this and this. There's only there are only 2 candles back up, and neither of them are perfect. Not terrible, but not perfect either. And therefore, I do think that this MPOS over here is substantial and should really be very carefully respected. And for that reason, I would prefer to have something, just a little dink here, just a little test of the demand side and then a push up and with some nice candles, then I could consider it, but not until then. I think hold the third you've got left if you were following the system, or FRP if you've got the whole lot, but also being very careful, obviously close beneath here, we're taking some off the table. And I would put to you any next clear supply side candles also a minus third. Okay, and what's that going to look like? Well, obviously it'll be a black candle, like the one I deleted from here not that long ago. So we'll show you that, and we'll show you this. Okay, so something like this in here, or that's candle's best buddy. And it's been a little while, hasn't it, since I have called them this, but this is what they are, the supply buddies. Okay, so that candle there and this candle here are your supply buddies or supply side buddies. That's going to have a black shadow in a second. There we go. And these are our supply side buddies, okay, because they both represent the taking of control by the supply side. So if you were to see either of those two candles, I used to do this a lot, didn't I? Back in Think Markets, I used to draw arrows in there. Then that would be minus a third. In particular, if it occurs beneath that major point of supply, because it is reinforcing that point of supply. Two great case studies. Get to make some really interesting points there. Craig's got SPR, so obviously we won't do that one again, Craig. And then we're going to Justin with ANG, which is Austin Engineering. Wonderful, wonderful case study. Not wonderful what's happening, but a great case study in trend following, in just sticking with it until it's time not to stick with it. I think we're very close to that. And clearly, if we are looking under here, we do have 2 points of demand. So there's a point of demand here and a point of demand here. And what does it tell you if we close beneath those points of demand? The only way you can form these points of demand is if buying, the demand side, overwhelms the supply side. If we're trading beneath here, that demand is gone. It doesn't exist anymore. It's been fulfilled. And that's the way you really have to think about demand. Demand is a word. Demand as a beast, as an entity, it's cash that is wanting shares. And if we're trading down here, that cash has shares. And then where's the cash? Think about it. Think about it. Think about it. If that demand has received those shares, they've only got one option, right? What is it? Well, I guess they've got 2 they can hold, but the other one is to become part of supply. And they're in a now, they're immediately in a losing position. That's not much fun. The other thing we need to be worried about is obviously we've got declining points of supply, which means really we've got supply reinforcement or building supply in the system, and it's not looking that good. So I would go. I'm kind of look. I don't think you do less than 2/3 if you get my drift. On a close below. So I'm going to go close less than would be minus 2/3, but and in that case, you're saying, well, I'll hold a third on the basis of riding the long-term uptrend, because, well, let's face it. I mean, like, this is the closest example here, but it was nowhere near as severe as this. I'm saying a closest example to where it did move into a little downtrend and threw you a dummy. And to be fair, it actually didn't, because that's an inside candle. So, is this one? Yeah, maybe that's about as severe. So we're really saying holding a third on the basis that something like that happens. And that would be the maximum risk I think you'd stick with on that one. And Justin, just reading the rest of his comment there, starting to see some supply. Yes, you are, Justin. Not major, he says. I think it actually is starting to be a bit major, and he's thinking about minus 1/3, and I've put to you, Justin, maybe 2/3 is a better way to go. Adrian's asking for ALL, and geez, we're going to see this so many times, aren't we? Just the most wonderful trends, unfortunately, that were, what did I say? Their demise was hastened by the events of last week. And look at this FRP, plain sailing, and we get this tectonic shift. We've come back pretty well, I think, haven't we? I mean, that's an impressive candle. Indecision there, very concerned, but then just strike it off here. This is okay. This is okay. Look, I think we're holding what we've got. If you're still FRP, okay. Well, would you not be FRP? Look, I think you had every reason on this day here to minus 1/3. And I think at the very, very most, you're still plus 2/3. And let's just say, for argument's sake, that's where we're going to stay. So FRP, which is probably plus 2/3 if you're applying the model. I'll put it down there because it does not mean we're buying 2/3 up here. And then see how we go. Obviously, we don't want to see those fingerprints of supply, those supply buddies occurring in and around a zone around about here. Okay, so just beneath this point of supply, that would be disturbing for me. I'd dump a third if I saw a big black candle there or a black body with a long upper shadow. Obviously, anything beneath here is cutting risk, and then we'll just monitor to see if we have other reasons to do so. And until then, the overall trend is still fine. But you can see how I look at setups, how I look at charts. I always start with the worst case scenario, don't I? I always start with, well, how do I get out of this? And once I've determined that, then let's talk about staying in it, sort of thing. So we know how to get out of that. I think in the meantime, you can stay in it. Let's go to EDV, Endeavour Group, also for Adrian. And this was setting up literally on this day here. I felt that was a really solid looking turnaround setup because we'd had a nice base pattern. You know, it's basing here, but it's sort of also basing here. Nice switch out to white candles, predominantly white, good push, steady accumulation. That's program buy orders. Did the respect, or showed the respect we needed to show here at the long-term trend ribbon, did the dink and up we went. And I'm pretty sure that's the day I put it in the chart watch scans, probably the day that triggered Adrian to get in. But it was just unfortunate timing, and you're going to have a batch of trades that you get into following the trend right before the correction, which you couldn't see coming. And then we just need to figure out how to deal with them, and we deal with them in a methodical way. This is exactly the candle here that I was talking about on all of the other ones so far, is we don't want to see that supply side showing around the major point of supply formed in many cases by last week's pullback. So that is disturbing in itself, okay? I still think there's enough to give this a chance, but I'm not sure if I want to be holding a full risk position just yet. I think give it another candle and see what the response is to that. So if we get this, then it will be very, very obvious that we have some problems here. So if we saw that, then I would immediately go minus 1/3. So we're obviously assuming that you added a third here, and that probably closes the trade, doesn't it? Because you didn't have another reason to add any more than that. If you got into, say, 300 shares here, just using a round number, and you wanted to get out of that 300 shares in thirds, if that was your choice, then that could be a third, and you just keep 200 shares in that case. That is, of course, assuming that occurs. Look, if it doesn't occur, if we get something that looks more like this, so one of these candles, something like, like that, we're okay. You don't have to do that. So, like with many of these tonight, we're on alert. We're looking for reasons to pull the trigger, and if we don't get them, see how high we can go. But this is not, we're not adding a risk on any of these tonight apart from that SPR. This is the closest thing to adding risk. Obviously not adding risk there on that last candle. I've done ALL for Brendan. I've done ALL for you, and Brendan's got CAR Group, CAR. Let me zoom out to my normal zoom. And I think I think you would have been all out of this. I can't see a reason prior to today to actually have any position because of all of this stuff that's occurred, and not just recently, but I think you would have been out of this one for a very long time. I think you would have been out of this well before this little dip here, because, look, probably somewhere around here, we might even be out, certainly around here, and there's so many times after that. There can be no risk in here. Would you have been buying back on these days here? Look, possibly. I mean, it didn't look terrible there, but as you can see, it's still very sideways, and we still really need to get a little bit closer to that major point of supply. And even if you did get in there, there's reasons not to be in there since. So to answer your question, Brendan, I don't think we've had a position up to this point. Are we looking to take a position? I don't think we've got enough evidence to do so. I think it's a very good candle today. It could have been better. It could have closed near the high. So there is a little bit of supply lurking in the system, and that is, of course, a part manifestation of the huge amount of supply we should expect up around here. That should be no surprise to anybody. How do you know there's supply there? If you're new to these webinars, you've never heard me speak before, and you say, well, Carl, how the hell should I know if there's supply there? Well, because there are so many turning points from the past. There are so many times that we fell from those highs, and the only way you can fall from a high, of course, is if you have supply in the system, or excess supply in the system. So we know there is somebody up there, big fund manager. In actuality, because we can talk about supply. It's faceless, but in actual fact, supply is a fund manager. It's literally a fund manager with a bunch of shares who thinks at that $37 mark, 36, 37, CAR Group is fully priced. You know the way these people think, right? So when it gets up there, they're feeding the market, they're feeding the demand of the market. Now, clearly, there's also a bunch of buying out there. People who think, you know what, I think it's worth $50, so I'm going to take your supply, okay? Up to a point, because just until before today, the supply side was winning, wasn't it? Before today, the supply side was winning. Today, I think we're back in more of an equilibrium, and I think we all agree we don't buy equilibriums, do we? We buy excess demand. We to buy clear showings of excess demand. So I think that this is a good sign. If you've got CAR Group, Brendan, I think you hold what you've got, because we're at least back to equilibrium in what is a short-term equilibrium in a long-term uptrend. To buy it, we still need to deal with this major point of supply up here. So I would say that you'd need to see something like this, even if you got another up day, and then you saw sort of a little, let's do this one here, we saw a little bit of a pullback, and then you started to push up again. And it's sort of through here that I would start to get interested in this, with nice white-bodied candles and/or candles with downward pointing shadows. And particularly if we start to close in this sort of pink zone here, that's kind of above 36, it's telling us that that major point of supply isn't an issue anymore. Okay, we've had enough goes over this long period of time to dismantle the supply that was there, and what we're left with is the demand that's so clearly in the system. But we're not there yet. So I can go hold if you've got it. If you don't have it, I've told you what we still need to see before we consider adding risk to it, in my opinion. Those are the offline requests for Aussie stocks. Going to go to your online requests here. Thank you, everybody, for being so patient. And I'm going to read some comments here just in case I might have missed anything. They're all stocks. Hi, hello, everyone. Carl, what was the first book? The first book was Market Wizards, Interviews with Top Traders. It's that one there. So if you've been listening, Colin asked this, not Colin, who asked this one? Avant asked this one. Avant, I sent you with last week's webinar notification. I sent you a link to a YouTube page with a chapter list of this book, so you can go listen to it there, and get 8 chapters, but go buy the book, you get all of the wisdom. Sudesh, are you following any Weinstein Stage 2 shares currently? Well, I don't follow Stan Weinstein's technical analysis method strictly, Sudesh, so I couldn't tell you which ones are Stage 1, Stage 2, Stage 3, Stage 4s. I have my own model I've developed myself. I like to think it's better than Stan Weinstein's because it's far more responsive. And if you've read Stan Weinstein's book and you've followed me for any period of time, you would agree with that statement too. But don't forget, Stan Weinstein wrote that book in 1987, 88. So I'm sure he's doing different things now as well. Okay. Okay, the rest are all stock requests. So let's get to those. Adonis is first in best dressed with CMM. And looking great, obviously been in my daily scan watch list very regularly, and there's no reason why you shouldn't continue to hold this. It's not going to go in tomorrow's list, Adonis, and that's actually a good opportunity, I think, to show you tomorrow's list. And let's head over here. So I've got AMP. I love big white candles, obviously, particularly on results with a fair bit of volume there, removing supply, lots of money coming in, and a high close today. So happy to own that one. This one I thought a little bit about because we still have this point of supply up here, but I just felt this was such a confident close into this point of supply and not far away from that one. I think GrainCorp's dealt with the supply there, and I think it can go now. So a 1/3 there, but maybe a slightly higher risk than some of the other ones. look, almost ditto on that, because we do have this major point of supply, but you can see the confidence in this close here on LTR Pharma, really saying we're not worried about this. And I think the proximity there is for the major point of supply. Very similar. This one's just the stairway to heaven, so many of you probably already on it. Maybe look to add risk to that one. Rimfire's been fairly new in the list. Probably hasn't been in the list because of the liquidity filter, but since it has met the filter, it's been there a few times. Still looks very good. Supply Network still looks very good. Maybe that close could have been a little bit, well, it could have been a little bit better. Could have closed in the high, but it's still very good. SPR we talked about before. TNE is just the stairway to heaven. Absolutely amazing. I'm guessing many of you are on this one, given how many times it's been in my list. Same probably with this one, WGX. This is the best of the gold sector right here. A few thumbs up coming through. And Yancoal. This one is a little bit interesting, and this is a little bit of a specky. Yes, it's a continuation setup, but it's kind of a turnaround play within a continuation setup, if you get what I mean. So I just like the way it's held, and it's held, and it's held. It wants to hold here. Good candle, strong candle, and I think you can add a little bit of risk here. Fairly tight stop there, but if we were to rank, I think the setups in order, this might be coming a little bit towards the low, but I think that's an interesting setup. Something about it tickled my fancy. There you go. In terms of short setups, well, this one's been in the list many, many times. Horizon before today's decline. No surprise there if you know how to read a chart, of course, as I say. But if we are buyers of big white candles after results on large volume, we should be sellers of big black candles as well on results, much like this one. I'm proud to say that nobody listening to me tonight owns Beach Petroleum, right? Because it is one of those favourites, isn't it? It's one of those, Aussie investor favourites for some reason. A lot of thumbs up coming good. And I bet you probably owned it before you met me, and you're probably glad you don't now. And it is one of those traps that people get caught into for some reason. I don't know why people love Beach Petroleum, but yeah, there was obviously the trends prior to this, and the fact it's been a feature chart in my daily short list for a while. CXL, well, it just keeps going down, doesn't it? Kelsian, I think this is another candidate for an earnings miss here. Mineral Resources, for obvious reasons. Lithium, tank today. Iron ore going down. Monadelphous in a weak energy sector. Sims Group, that's textbook stuff right there. I mean, if we literally turn this chart upside down, turned all the pinks into greens, turned all the white candles into black candles and all the black candles into white candles, we would have the perfect long. And therefore, it must be the perfect short. STX is another one of those stocks like BPT that for some reason Aussies love. I don't get it, but it has been horrible for a long time. And Tyro, I think, also is more of a turnaround play, so turning off that long-term trend ribbon, and Weebit is a continuation. So they are the top 10, it turns out, longs and shorts, I think, for you tomorrow. Which takes me back to Capricorn, which didn't make the list today, and that's what I wanted to talk about today, is the reason why, if you don't see it on my list in the morning at 9 a.m. Eastern Standard Time when it gets published, like clockwork, because it's on a timer, then don't fret. Don't say, why is Capricorn not there today? Does Carl not like it? Well, Carl wouldn't add a third today because of that upper shadow. Doesn't mean Carl doesn't like the stock. Carl loves the stock because it's been in just about every other day. But I just don't think we need to plus 1/3 it today, so it didn't go on the list. So the list is stuff that I think it's good to go. It's ready for a plus 1/3. So hopefully that answers your question on that one, Adonis. And I'm going to head back to here and go to another one that's in a similar boat, actually. So this hasn't been on the list for a couple of weeks. And I reckon probably the last time it got itself on the list was maybe that candle there. This is a bit of an issue, but certainly not a reason to get out, nor is that one, nor is that one, nor is that one. This is starting to be a problem, but even then I wouldn't get out. It has tickled the trough, our key trigger trough, which is that one through there. Maybe that's what I'm going to start to call that, our trigger trough, which is that one through there, but only a tickle. And that wouldn't be enough for me. But I think this candle here it warrants the precautionary minus 1/3. No need to do anything on this candle, although it's not great. And really, because this shadow is pushing, so we've come through. Look how perfect. I mean, that's the right word. Look how perfect my short-term trend ribbon is up until we break through it. Okay, and it's not perfect. It's still perfect because it's telling me where dynamic supply is now. It's gone from telling me where dynamic demand is to dynamic supply. And there's that little push another one there, and we're just hovering. But look, it's not terrible. The market's been good, and it's helping this one potentially get back above it. I think we're still minus a third on that one, or we're still 2/3, plus 2/3 is where we are. Obviously, close beneath there. I don't think you're minusing a third there. I think you're minusing 2/3 there. You're all out beneath that. And then see how we go. We are also going to be cautious, like we were for the others, and watch what happens in this zone, looking for the supply side candle in and around there. Okay. Otherwise, what are we? Plus 2/3 on this one. Plus 2/3 on this one. Not an FRP. And we've taken some off the table. Let's go to your third one, Adonis, which is HUB. Less drastic steps required here. And I'm getting very lucky with your setups tonight, ladies and gentlemen, because you give me one after the other that it just, like, there's the lesson. The lesson is there. Look at the difference between SXE, both monsters, right? I mean, look at this chart beforehand, and then look at HUB. You know, both great, just perfect trends. And yet look how SXE is changing. Look how HUB is changing. They're changing in very different ways. And, you know, HUB is so much better than SXE. Now, HUB could be better again because we are losing momentum here. There's no doubt about it. But what a great couple of stocks to put together. Say, well, okay, there are reasons why I must act there, and there are reasons why I don't need to act here. And all we're doing, we're just listening. We're just listening to the market. The market's always talking to you. Market is always telling you what it wants to do. You just need to bloody well listen. We don't have to do anything just yet, but obviously under here we've got some issues. So, you know, close less than would be minus a third. Is this one of those supply events? And like I said, I don't sell a course. There's no subscriptions you can buy if you wanted to, and I don't have a book you can download, an ebook you can download with all my pictures. I don't. It's a common sense system. It's not a black box system. You tell me, is that upward shadow sufficient to take further action and manage your risk? You will have an opinion. I will have an opinion. My job in these sessions is to draw your opinion as close to mine as possible if you see value in that. If you want to keep your opinion by all means. I don't think that's enough. I don't think that's sufficient to warrant any action at this stage. Let's do a hypothetical here. Let's say that shadow was that big today instead. Okay? How would we feel about that? How would you feel? Don't worry how I feel about it. How would you feel about that? Would you think that candle is now sufficient to warrant managing some more of your risk? And I put to you it is, okay, if that occurred, but it didn't occur, okay? So you don't have to do anything, but you know what to look for. Okay, let's go to SPZ, being a little bit cheeky here. Adonis asking for 4 stocks, but they are good case studies, so I will indulge you. And what do we say about this one? We had a candle that doesn't exist. So that one, if we saw that, we would add a third. Well, we obviously didn't see that one, so we didn't have to add a third. And on this one, I think I said something like, look, obviously not the best candle, but we're going to go for risk position because I really can't find another reason to sell it. As it turns out, the market tanked, and we found some reasons. I think that would have been the first and only point that you probably would have done something about it. So let's say you would have gone minus a third there. And I think you're still holding your 2/3 and you're not doing much else. Is this sufficient to warrant closing risk or closing more risk? It's not far off it, but whilst we're above the short-term uptrend ribbon, I think I could probably give it some more room. So I think on this one, we're going plus 2/3 is our position. We're certainly not adding risk. There's just no need to do that at this stage. The problem here is this is so far away. Like, obviously we know that's our next trigger trough. I like that word. I'm going to keep using that, our trigger trough. But because you don't want to have yourself into a position where you're waiting so long. So just watch out. Maybe you might get a nasty black candle that closes beneath the short-term trend ribbon. That's your second, third, and just see how you go from there. And you'll know in the candles what you need to do. Let's go to Colin. Colin's got WGX, which fortunately I've already talked about. That is on my list tomorrow for plus 1/3. So if you have it, obviously you are FRP. If you're feeling this way inclined, you're going to go plus 1/3 also. Let's go to, is the $3, is $3 a problem? Now, this is a really good question. Colin's saying, what are your thoughts? Okay, I'm guessing Colin's in it. I'm guessing Colin's in it, and he's saying, do I need to take some profit at $3? Look, you could have. I don't think $3 is one of those really significant numbers. We know, and I'm pretty sure I've said this before, 2s, 4s, 5. I wouldn't go 6. I wouldn't. It's not really between 5 and 10. It's not. There's but nobody's going. Please God, if you let WGX go to $7. I promise I'll get, nobody's doing that, right? But if you could get 10, so 3, I don't think I'm too fussed about it. I'll leave. If you did it, don't feel bad that you did it. You've got a big white candle at the end of the day. You're happy you've still got 2/3, and you know what? If you add some, if you bought it back tomorrow because Carl said it's +3, that's not the end of the world either. Yeah, I don't think we're too fussed. I mean, to be fair, that was a little reaction, wasn't it? That was a reaction right there to $3. But it's not one of those major round numbers. Let's go to Francine. What do I think of SHL? I haven't looked at this one for a while. So this one's trying to turn around, isn't it? I think, actually, from memory, we said this was a potential aggressive setup. Where did I say that? Somewhere down here, or maybe even here. Okay. It hasn't done poorly, to be fair. In a market that has been very poor, this has held up extremely well. White candle, white candle, white candle. I think we're fine. If you did get into that 1.6, I still think you're an FRP at this stage. I don't think we need to add any risk to this one. It just doesn't warrant it. And obviously, we have a trigger trough down here. I've got it down on that word now. Obviously, if you're closing beneath there, then I think you're dusting your position and resigning this one to its fate thereafter. So let's go close less than is minus whatever you've got, right? Let's just go close less than, you're going to ZRP. Can't confuse that one. And AAI, I reckon that one's going to be in the USA there, Francine, isn't it? Alcoa, which is AA over there in America. But you've put an I there, so I'm confused by the I. But I'm going to leave that one for now. You can send me a message if I've got that wrong. Don't put any more ASX ones in, please, because I think we're coming up to time on that one. Yes, if you've got a UR Barry, just slip that one in. Okay, I know where to stop now. We do have to end somewhere. Alas, everybody, we can't go on forever in these. A2 milk, which is frustrating. Yeah, sometimes you can hear that frustration, that sigh, because I felt that this looked like a really neat setup here. And it, look, like many of them, hasn't worked out. What do we do now? I mean, it was only, it's not like we were, full risk position up to that stage. We were just sort of looking to start to get back into what I thought was going to be a new trend. I think we're just waiting for that exit and hoping it doesn't come. And if it doesn't come, fantastic, right? We'll just see where this one goes. But we do need to have a clear point here where obviously we'd go to ZRP. And then if there's something else that occurs around here, obviously beneath this point of supply in the red zone, that zone is about to turn red, I promise you. It's going to turn red. There you go. Then we would, probably around about there, we would be looking to maybe reduce some risk as well in there, but that's predicting the future. I think you can hold what you've got until then, but it kind of does get to the point on a few of these where you're going, well, what am I waiting for? If it's not like WGX or CMM or SPR, if it's not one of those great setups, what am I waiting for? The risk I've got in here could be better applied somewhere else. Okay, so yes, there isn't a reason to be ZRP just yet, but well, maybe on an opportunity cost basis there is, especially when you're considering that we're at our lowest risk setting right now. So there's only so much capital to go around. So you really want to try and make sure it's in the best of the best. And I feel your frustration, but really it's so not bad, isn't it? It's not that bad from where we probably got in around about 705 or whatever it is, and we're sort of 680 right now. It could have been a lot worse given what happened last week. So you've got to. Don't always look at it as, well, this trade hasn't worked out. This trade could have been a lot worse. Look at the positives, I guess, and Ellie. Let's go to Avant, who has Elders, which I don't think we did. We did Endeavour, not Elders. And I'm going to go normal zoom here, which was another one which I thought, a bit like A2 Milk, started to look very good here for a turnaround play. Very, very good. And then, we get those candles from last week, but it has shown its pedigree since then, to be fair. And I'd say that's better than a market perform from, 870 into 920 is close to 10%, right? So if not for the events of last week, I speculate, I'll never know for sure, but I speculate that demand would have been pushing this to $10. It's a bit like the last one, like A2 Milk, although I think the candles since that downturn are better here. They're much better. So I'm happy to hold what we've got there. I mean, I'd go FRP. I don't think I'm adding, though. I don't think there's a case to add on the basis that this is just too much of a problem area for now. But as we get closer to that, and hopefully as we start to sort of put in a little higher trough with the right candles, I could see us adding some risk there, but not right now. FRP until then. Let's go to NXL, which is so similar to even A2 Milk, like many of these other ones. We did say minus 2/3 beneath there, I think. So, hey, who am I to argue with myself? If you did that and you're zero risk position right now, no arguments at all, no complaints, because this is in that limbo, isn't it? It's in that stage between being a buy and being a sell, literally outright. And for it to be a buy, we would need, so we've got this issue here, we've got this issue here, we've got this issue here. So we want to see a response from the demand side at those areas. We want to see a stalwart performance. And don't get me wrong, these are good here. So these are, well, certainly that is, but the other ones aren't terrible. But there's some good candles coming in. I'm going to go FRP, not adding risk, and just waiting and watching for the signals that the market gives us from here. Let us go to TLX, which is going to be ditto. I don't think I'll do any more analysis. I mean, I think, there are candles in here that have been very clearly for you in the past, closing beneath those levels, exiting 2/3. I can't see a reason to have any risk at this stage. I think given what's occurred and what I've written in the past, I think we are a ZRP at this stage. And this one has not come back. What a great two charts to put together again between the last one we had, which was NXL. Some really decent candles coming in there. Elders, some really, really decent candles coming in. And then we get to TLX and we're seeing a complete absence of that style of demand in the market at this stage. Okay, so I can't see any reason to be in that one at this stage. And it would take quite a bit, I put to you, before we could say that. Let's go to Michael RAC. Can I go ditto again? ZRP prior to this point, because look at this, I almost feel like I've done that thing where I colour in the black candles. Doesn't it feel like that? Like Carl's just gone and put a bunch of black candles on there. I actually haven't. I don't think I've got any black candles on there. Let me double check. No, they're actually real candles. But today is a changing of the guard. There's a really important white candle on a little bit of volume, not great, but hey, it's blipped. Look, that's where I would be, and today's not enough to push me into a third. And it might be famous last words, this might go to $2 without the pullback that I would so dearly love to see first before I was to get in. I just want to see a little dink here, preferably, getting above that short-term trend ribbon, pulling back to it, holding it, and then pushing up, and with the right candle in here, that's kind of where I want to see the right candle. That's where I could add some risk. And we're just a little bit of a ways away from it. So, you're welcome to keep asking me about that one. Let me move that one, put that one there, and that's kind of what we want to see. Okay. But a very, very promising day there. If you didn't follow the model and you still got it, you've got a great candle beneath which to peg your exit. And beneath here, I think, like I've written in the past, ZRP, you would want to be ZRP. Let's go to Michael's second one, HCL. I did see this today. It did come up in my scan. It didn't make the list. Not because it's not interesting. It is super interesting. I just missed out on the basis of that shadow there. I just felt it needed a higher close. And, there are a few shadows. There's a bit of supply just lurking in the system for this one. We're also kind of just coming in here. It's an old demand/supply point. So just questioning on the tradecraft whether that's worth it. But as you know, and I'm sure the reason why you saw it as well, Michael, was the big candles, the white candles, and the volume is very interesting. But I think we'll find better ones of this variety of setup than what you'll see here. So yes, I saw it. I was wondering if anybody else would see it tonight, so I'm glad you did. But it just missed out for me. AL3 saw some nice candles. There we go. We said FRP plus 1/3 here. And really the day after was probably your signal that this one isn't going to do what we hoped it would do, and there's your probably final signal there to knock that one out. Okay, so I think we're ZRP here, and just wait and watch and see, and if you get another signal we can look at it then. If today's candle closed on the high, I would have been far more encouraged. It didn't. There's supply up there, so just keeping the capital tight, just keeping a tight rein on that capital, and making sure it is in the best place it can be. Let's go to your third one. No, that was your third one, Michael. All done. Hanelli's got Nike in America. We'll do that in a second. Nicola's got Yancoal. Results out tomorrow. Oh shit. Okay, I didn't realise. So that might change a few things here. It could pop. It could not pop. The analysis is still the analysis. Look at all this stuff. We'll get rid of those because we don't need them anymore. I stand by the analysis. I still think it's a plus 1/3, but you won't get a chance. If it's good, it's going to pop up. If it's bad, you'll be glad you didn't. We'll find out tomorrow. But thank you for letting me know, Nicola. Nicola's also got Orica. I'm going to skip ahead to that one. I'll come back to Monica and David in a second. This came up in the list, so it's in the broader list, but it didn't make the feature list. It didn't make that top 10. But yes, if you've got it, certainly FRP, and because it's in the list, look, it is a plus 1/3 for me. I just didn't feel it was as strong as some of the other ones. But yes, if you've got it, FRP plus 1/3, no complaints. And the thing that would have changed it for me is a little bit more volume, just to give, because we're trying to turn around. We want to see supply removal, so a little bit more volume would have been nicer. Not essential, but would have been preferred. And then a higher close on the day. Nicola would have really elevated that up the list. Didn't quite get there, but otherwise, no. I stand by my claim. Is that the right word? My affirmation that if it's in the list, it's a plus 1/3. If it's in the feature chart, they are my higher conviction setups. But it's just my opinion, what appealed to me. David's got RSG, where we do have some problems, like many of the other ones. I don't think you're holding a full risk position, and the reason why I say that is you might want to correct that if you haven't followed it up to this point. So I think we have, again, I'm not here every day for you, and we don't cover these every week. So I can't remember the last time we did RSG in a session, but we do have still all good price action through here, and then we come through the trigger trough, a very important trigger trough, double trough there. And that is a problem, and then we print again. So I think I think you're plus 1/3 at most here. I think you're plus 1/3 at most on this one, and then that third goes out on a close beneath here, or if you see something more sinister, in and around there. So the big sort of supply side candle in there. Otherwise, close less than minus 1/3, and hopefully you're getting in the habit of doing this at home, where you look at a chart, you draw your lines on it, close, less than symbol, where you're getting out of these things, and hopefully you're following through on them as well. But it should really be that straightforward. It's just a method now. It's just methodical, just going through these. Monica's asked for SPR, which I've done. TNE, which I've coincidentally also done when I looked at the best of the best. This is one of my feature charts here for tomorrow, Monica. So if I go copy here and paste, and that should be methodical as well, shouldn't it? You should see that candle and just go copy paste, and not just copy paste, go and do broking platform and do the work there as well. Certainly you get to the end of the night, or the end of your analysis, and you have your shortlist, and you're shortlisting, and then you're doing that with the best ones. We are going to go to DBI, which is it's going to be a bit of a slow and steady one here, Robert. infrastructure fund notes, gosh knows. So, hey, it didn't go down either, did it? So that's good too. And, you know, if you hold on to it long enough, I don't know when the dividend is, but there's probably a decent dividend yield there as well. So boring, sometimes it's beautiful, and that's what this is. I'm still an FRP here, but don't expect this to be doing anything wonderful anytime soon. It's probably just going to, hopefully, just trundle up, and hopefully it does, and that's really all we require of it. Okay, we don't need to see this at $6 tomorrow, because it won't be. So that one's fine. FRP. Not kind of my style, because I know the nature of the beast. I want to find things that are going to give me great capital gains. Perry's got WGX, which we've done, TNE, which we've done, and RAM, which we've all done. 3 out of my top 10, Perry, so great minds thinking alike there. APX got interesting, didn't it? And I think I put it in this day here. That's the day. In fact, I know I put it in that day there. Probably a few people who don't come to the webinars in the chart watch list probably scratch their head and say, oh, what's Carl talking about? Well, okay, we know for us, this is a turnaround play. It's really quite aggressive, isn't it? So plus 1.6, I think, was the way to go. And then if you got the next signal, you could add again. Look, you haven't got the signal since then. You're not doing poorly on your original trade. You're probably about break even. I don't think we have any major issues. These 3 candles aren't great at all. You know, they're manifesting supply where we don't want to see it in the trend-driven zone, but they're not that awful either. I mean, they're just rotating inside the body of that candle. And we're still very much at the top of this candle, which is the key candle. This is the demand side candle. So look, I think we're fine. I'm an FRP. Obviously, we're not adding risk at this stage. What would get you out? Well, you know, it's a 6th. Hopefully, that's what we're talking about here. And it's still probably down there unless we see, you know, something else happening before then, right? But I can't tell the future. So FRP, it's a long way for that -1. Hopefully we're just talking a little bit of risk here, because really this sort of a trade, that's all that should get. And same with this one, that's really all it should have gotten. And this one hasn't turned out as at all. And I think that's about the 4th time that I've got that wrong in a row, trying to predict the final turnaround for SGR. So don't ask me about that one anymore. For the sake of everybody listening, let us go we've gone from the best to the worst right there. We've done APX. AU is a bit boring at the moment. Can I get DUR? DUR is looking fine. I think I put it on the list today. It certainly didn't make the feature because it's very sideways. But I like today's candle. I like the trends. And in a horrible market, it's held up really well. So if we get a half decent market, I think this will continue to be half decent. That's probably the extent of Duratec's ability, is half decent, but that's not bad at all. It's not bad, it's half decent. Let's go to CAT, which again is one that must be talked about today because it wasn't in the list, was it? It wasn't in our top 10 or my top 10 for tomorrow, and you won't find it in the broader list for plus 1/3 because it's not plus 1/3 because of that shadow. It's not a sell by any stretch of the imagination. And we were looking at, we didn't get a close beneath, so we're okay. We're still FRP up to this point based upon everything we've talked about. FRP, that was the plus 1/3. That's when I ran it there. But FRP, that last candle is not a reason to do anything but continue to hold, but it's also not a reason to add risk at this stage. Let us go. I'm exhausted here, so I'm glad we're at the bottom of the list. I think a few people put in a few extra ones there. But we are going to go to the USA now, so don't ask me about any Aussie ones because I won't answer them. What have we got on screen? We've got the Twitter on screen at the moment, and we're going to head over here. And we're in the right place, but we're going to go here and type in, heading back up the list. Sorry, Roscoe's asked for SER is ASX. I thought that might have been a US one. So let me head back over here. Strategic Energy Resource. I'm going to go not ready yet, Roscoe. Well, like you say, Roscoe says it had an interesting close today. Yes, it had an interesting close today, but it still has some way to go. That is a very good description of what's happening there. But it's also very sketchy as well. So yes, it's an interesting close, but it's not an unusual close within the context of its recent price action. I'm thinking it would have to trade 2 cents with a nice white candle and plenty of volume to get my interest, and it's a ways away from that at this stage. Let us go to the US ones. And we're going to head back up the list and go AAI, not there, completely not there. Let's go here, AAI, which is Asian Alliance International. Okay, I have not heard of that one. I'm going to put this in the category as like the last one, needs a bit more work, I think. Let's go to the week. Didn't want to go to the weekly chart, but we'll stay here while we're here. So obviously we've got the point of supply here, and then there's a point of supply around about 760. Keep that in your memory. And we're going to go back here. What I wanted to do was zoom out a little bit, but I'm just noticing I can't zoom out because it's a fairly new company, or at least it hasn't been on trading for very long. So that's all the data I have. Let's work with what we have. Okay. Not there. Where's my... I should pay more attention here. Where's my path tool? That's what I'm looking for. Okay. So we have... this is all one move down as far as I can tell. Then we've got this. Okay. So we're still lower troughs. We are going to have a higher peak. I therefore need to see a higher trough formed before I really want to do anything. Also want to see a nice white candle pushing into 625 to say 650. Any white candle high close there is going to start to make this one look better. I'm not sure if this would be the best thing I'd find on any day, but if for whatever reason, Francine, okay, I think I'm on the wrong place here. So Francine's not asking about that one. I should have looked more closely. I did say, everybody, not to give me any more ASX stocks past a certain point. So that's why I'm getting mixed up here. So let's go back to over here, AAI. It can't be that one. So now I'm really confused. Is that an AAI or is that an AA1? Francine, I'm doing my best, but I'm not finding what you're putting out. High AAI on ASX was AWC. Oh, sorry. It was AWC. Thank you. Okay, so it's changed its code. I've missed that. Honestly, I haven't been paying attention to that at all. No, I'm still not. Oh, so I'm not here. Okay, hold on. AAI. There we go. Okay, I can't do a technical analysis on that one. What we can do is go to Alcoa in the US, Francine, and look at it there, because I can't do anything for you here. There's nothing. There's no chart. Thank you. I think I've got all of those now, so I'm going to head back to here. Doing my best. Let's go to here. I'll look at Alcoa for you. And there's nothing to see there at all. No reason to buy that one, given the short-term trend, long-term trend, sea of black candles, and lower peaks, lower troughs. I know AWC was looking very good. I know it turned around. I know it all happened very quickly. Having said that, looking at this Alcoa chart as a proxy for what happened on AWC, because let's face it, it's going to be very similar. There were plenty of exit signals through here, plenty of black candles, plenty of lower peaks, plenty of trigger troughs getting closing beneath long-term trend ribbons. So there were lots of reasons and lots of triggers to get us out prior to today. We're going to Perry, who's got TW, TradeWeb, which looks magic. So now we're really gunning for that 1/3 of risk we can have in the market at this point in time. Let me go back to the weekly chart, zoom out there, and it's even better. There's absolutely nothing in the way of this one. This is absolute blue sky from here, which makes it look and feel even better to me. So I'm going to go FRP plus 1/3 on this one. That is a wonderful looking chart, and it does show even in uncertain markets you can find little pockets of certainty, and that's what we're seeing here, where the demand side's so sure they want to be in, they're throwing their cash at this one. The supply side is just as sure they don't want to be out. Why is that? It can only be because despite all of these worrying things in the world right now, this one is doing good stuff. Let's go to LRN for Stride. Another great chart. Going to go to the weekly chart, and I'm probably going to go ditto here. Beautiful big white candle. I love to buy those. There's a little gap and run. Probably some news. The volume's there. I can't see any reason not to. FRP plus 1/3 here, and click save on that one. If I didn't, just go. I'm pretty sure I did, didn't I? Click save on that one. SBS. Okay, I'm not even going to try and pronounce that one. Big gap and run there. And we'll go to the weekly chart. I bet you we'll find some supply points here. We're not, which is surprising for, I'm guessing that's I was thinking it might be a mining company, but it's not. I'm not even going to try. I'm guessing it's Brazilian. FRP plus 1/3, all goods. I don't care what it does. It's not relevant to me. And we're going to click save on that one. And Peter's got, thank you, Perry. Peter's got 3 here in the US. Regeneron, which is looking fantastic. And we'll go to the weekly chart here. Just magic. Well done, gentlemen. I mean, really and truly, these are fantastic setups. In a sea of uncertainty, you have found certainty, and that is impressive. So well done. Save plus 1/3 FRP for you on that one. Peter, going to your second one here, PSN, Parsons Corporation. Just as good, I reckon. I'm not going to find anything outside here. Well done. And we can do this quite quickly, I think, because isn't it refreshing to get to the USA after all of those trials and tribulations, what felt like it for me anyway, in Australia, to come here and just see some of these wonderful charts. CMPO. Oh, amazing. And look, if you feel that this has gone too far, cut the risk in half, go a sixth, whatever it is. There's nothing past that. So it really is blue sky from here. Anything can happen now. Right, there are no impediments in the market's mind as to where this could go. It's taken out 10, the big round number there, and people are looking up now to where it could go. Certainly the volume confirms the gap, the run. If you feel that it's gone too far, look, maybe try one of the other ones. It's okay, but don't completely write this one off. I'm plus 1/3 here, but if it takes you to going down to 1/6, then do that. If it takes you just putting $50 on it, buying 5 shares of the thing, just do that. Let's go to the next person with US stocks, sifting through the list here. I don't want to miss anybody, that's all, because I want everybody to get their questions answered tonight. NKE. This one from Hanelli. What are you looking for this one for, Hanelli? We're looking for a short. I'm guessing we're not looking at a long, and I know Nike is a name we all know. We're probably wearing something on our person right now that's got that brand on it, but that doesn't automatically make it a good stock, right? That doesn't make it highly profitable. It doesn't make it a good opportunity in terms of risk-adjusted return out of all of the opportunities out there. I can only see a short here. I can't see a long. Even then, I would need to see the next black candle with a low close to go short, or a upward shadow into the light peak zone. But there is no buying here for me. This is not an aggressive setup because we have not built up a sufficient base pattern. We're not making high peaks and high troughs. We're not seeing really significant showings of demand side candles. So only looking for shorts here. Maybe that's what Hanelli's asking for there. If that's the case, then you're on the right track. Let's go up the list now to, I think that's it. I think that's all of our US shares. I'll come down the list to make sure I haven't missed anybody, and I haven't. So unless there is something, not so much asking a new stock, but if you're requiring clarification on any of those other ones, or if I've done something wrong, please let me know. If that isn't the case, and I'll keep an eye on that screen while I switch back here and read the disclaimer, because that's something we need to do at the end of all of our sessions, is remind you that everything we've discussed today is general in nature, has not taken into account your personal financial circumstances, objectives or particular needs. So before acting upon this general advice, you should consider it carefully or seek the help of a financial professional to determine its appropriateness for you. Trading, investing is risky. Markets don't always go up. Sometimes they go down. It could cause you to lose money. Always remember, it's you and not I who's responsible for the stuff that you choose to do. Everybody's saying thank you great as always. I hope it was. I had lots of fun tonight. It is a very interesting market, and if you are cutting your teeth in this market, you're learning your trade, this is a good thing. This is a great place to be doing it. So keep your bets small. Soak in as much information as you can, as I said, not just in terms of your market information that you're learning every day, how to apply your trade, but also some of these great pearls of wisdom from traders that have come before us as well. It's been a pleasure chatting with you this evening. All the best for your trading and investing until we catch up again. Bye-bye for now.